Little one Paul here. Today I'm going to go over a strategy. If you see my last video, I talked about this with crypto, but today I want to go over it with stocks. It's basically using the 90-95 with the linear line regression candle method, and I've talked about both on this channel. There's separate videos for both. But today I'm going to show you how to use this for the stock market. The main goal here for this strategy is to do this on longer time frames, because you can get the best results. But depending on what you're using this for, if you're doing it on Robinhood, you might want to go down to like the hour because of the contracts. But if you're doing this on Forex, you can probably get away with doing it on the day chart. But anyway, I'm gonna show you how to set it up and what to look for with these two indicators. Okay, so the first thing you're going to need to do is you're going to need to set up your 90-95. Now, if you've seen my previous videos, you can get this two different ways. You can go to Ghost Market Pro, which is a paid indicator, and you would have to load up your swing. You have to load up your swing and then check everything off except for the 90-95, and then it'll set you up. Let me just show you real quick. Let's get rid of this. So if you go here to your Ghost Market Pro, if you decide to get Ghost Market Pro, I've made videos on this. So I'm not going to go too much into it. But once you get Ghost Market Pro, you want to get the swing, and then you want to check everything off except for the 90-95. So if you want to get Ghost Market Pro, I'll put links below if you want to get it. But otherwise, if you don't want to get that, you're going to have to use two indicators. You're going to have to do CME EMA trim bars. Click that twice, and you're going to be putting in 90-95. Now, the next part of this strategy is getting the linear regression candles. You're going to go to your settings. You're going to go to linear regression candles. You hit that, and once you have that on there, you can change the colors if you want, but you need to keep all three. And once you have that, you hide your regular candles. And then for optional, you can have MACD, RSI, one of those. Those can help you out too. So basically what you want to do for this strategy, and this is doing it on the day, and this is for doing it for longer trades. What you want to do is you want to pay attention. You want to look at what the linear line, the pivot line here, and you want to wait for it to cross. You want to wait for it to cross the 90-95. So basically every time, and it works the best in the highest time frame, and you want to wait for it to cross. So you got a moment right here. This is the start of the downtrend. And then you got right here was the start of the uptrend. Crosses again here, which is the start of the uptrend. Start of the downtrend. Start of the uptrend. So basically that's what you do. You want to wait for the linear line to cross the 90-95. Now if you happen to miss the cross, the next time you want to get in is you want to go with the direction of the trend. So for example, we're going to go back to the last time it crossed, which is right here. So last time it crossed up was right here. We're looking at SPY on the day. So last time it crossed was right here. So the next time to get in for scalps would be when the candles cross the linear line, which would be right here. So this would be a scalp right here. So you could enter right here because you know the direction's going up because the 90-95 is up. You can come in here and can ride this out. If you're doing Forex, it's a little easier. If you're not, you would have to buy a contract for about 14 days. But for SPY here, you would have made about $2,000 if you were able to ride this out for 14 days. Then you have another moment right here. This is another scalp moment. The 90-95, the direction's going up. So you want to focus with the linear line. You want to focus on the moment where it's going up. So you got one right here. So this is $1,453 if you could ride that out for 10 days. So you basically go in the direction of the 90.95. Once it has crossed, you go into that direction. So it's very easy to figure out what it's going to do. You wait for the cross with the linear line, the linear regression line, and the 90.95, and then you just wait for the candle to cross the linear line each time. So you want to always go with the direction. So you got your moment here, your moment right here, moment right here, moment right here, and your moment right here. So each of these are moments to actually make a lot in this. It works the best probably if you do it in Forex, because unless you have the money to pay for that long of a contract. This would be, this would be 10 days. So your contract would have to go for 10 days. And you pretty much have to buy it in the money contract. So you have another moment right here. And now, right now, we are in a downtrend. So the direction is not up. The direction is down. So what I would focus on is when the red candle crosses down to the linear line. That's the next trade. Unless the linear line crosses the 90.95, the direction is going to be down. So you're going to be concentrating on puts and the direction going down. So let's real quickly. This is the day. You can go to smaller time frames, but the day there kind of shows you the overall. But what I would personally do is I would go to the day. Go to the day, look at the overall direction, which we know is down, and then you can go to a smaller time frame if you want to do it that way. And it's the same way. You want to wait for your linear line to cross the 90.95. You see it happening right here. And you see it happening right here. So it depends on whichever time frame you want to use. But me personally, I try to do my trades for longer. So I'm looking at this on a day. So I'm basically looking at this on the day chart. And the day chart, now keep in mind, if you do your trades on the day chart, if you get in at these moments, you're going to be experiencing a lot of volatility in these moments, because there's a lot of volatility during these moments. But other than that, if you have enough capital, you should be able to take this volatility. But anyway, I like the strategy. It works really well for the stock market. So you always just want to go with the direction of the 90.95. Once it has crossed, once the linear regression candle pivot line has crossed, you always want to go in the direction of the cross. So right now the direction is down. So anyway, it's a very simple strategy. You just go in the direction of the cross. And if you miss the cross, you want to focus on the direction. After the cross, you want to focus on the direction. So if the direction is down, you want to look at your linear line, and you want to look at every time the candles are crossing in that direction. I wouldn't go against the trend with this, but you can if you want. But personally, you'll get the best results when you go with the trend. But anyway, guys, like the strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.